This will be an interesting video evaluating Amazon's profitability, how Amazon's been able to increase their profit margins, especially in two segments that in 2019 I doubted they could build to such levels of profitability. And those were the North American and international segment, which houses primarily their e-commerce business. I'm going to talk about and evaluate those margins, look at the longer term over the past 10 years, how their margins have expanded, and discuss the strategic choices that's allowed these margins to persistently increase. So let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in its latest quarter, Amazon's CFO said that worldwide operating income came in at $21.2 billion, their largest operating income quarter ever. And it was $1.2 billion above the higher end of what they thought they were going to be able to achieve. So they gave us a range of what they thought they were going to achieve in the quarter, and they actually came way above the range that they thought they were going to achieve, even at the higher end. So their profitability has absolutely soared. And there's several factors leading to this growth of profitability, one of which, of course, is a big factor that I talk about a lot, and that's economies in scale. Amazon's large size has grown to a level that allows for incremental revenue to be very, very profitable. And I'll give you one example. So imagine Amazon delivers a package to your household, let's say, and you've been a consistent customer for Amazon for years. But now your neighbor also joins Amazon and becomes a consistent customer for Amazon. Well, your neighbor is now a very profitable customer for Amazon because you're already a customer. And Amazon needs to visit your household maybe several times a month to deliver packages to your house. And if your neighbor is also a customer, Amazon's already coming to your street to make a delivery. So that incremental revenue from your neighbor is going to be very profitable because they were already there. And so delivering a package next door when they're already stopping at your house doesn't add very much to Amazon's cost, but it does add to its revenue. And so cost stays relatively flat, revenue goes up, and that's a really good profit margin business. That's what's allowed Amazon to expand their profitability by so much in recent years. I could show you this chart here with Amazon's profit margin, operating profit margin over a trailing 12-month period, and this is going back a decade to 2015. You can see how its operating margin used to be close to zero on a trailing 12-month basis, and you can see that phenomenal growth over the last decade up to 10.75%. And the primary cause of that growth is scale. Amazon's scale has allowed it to become so profitable. Now, before 2020, before the pandemic, I questioned whether Amazon's e-commerce business can ever reach lucrative profit margins because it was so costly to deliver packages to people's homes. And people sometimes buy a package that's, $10, and Amazon has to deliver that to your house in 2 days. That's not a profitable transaction for Amazon. But if Amazon can get enough people to order enough products, then it can be profitable. And that's what Amazon has achieved, is they've said, you know what, we'll deliver these first few packages to customers, even if it means that we're going to lose money on these first few packages, because we know 10 years down the line, if we get enough customers on the same street, then that can be a very lucrative business because we're going to stop on the street anyways, and we can deliver 50 packages on one block or one street, where before it was only one. And that's the factor behind Amazon's significant profit expansion. And they go on to say that their North American segment, the operating margin was was up 190 basis points year over year, and operating margins were at 8%. Operating margin was 3% in the international segment, and that was up 400 basis points year over year. That's the 8th consecutive quarter where they've seen year-over-year margin improvement in both the North America and international segment. And another reason why is not only are they getting those incremental customers that are very lucrative and profitable, but they're also improving their productivity and operations, looking at data, looking at their results, and making improvements, right? In the fourth quarter, they saw strong productivity in their transportation network from improved inventory placement, higher units per package, reduced travel distances. They also saw productivity in their fulfillment centers. So they're making improvements every day, every week, every month in how they're delivering these packages. And that's lowering the cost to serve customers. And oh, by the way, it's also lowering speed. It's also lowering the time customers have to wait for these packages. So customers are getting packages sooner, and it's costing Amazon less money to do that. And incrementally, they continue making improvements, including they're expanding their same-day delivery network. So before, they used to promise most people that you'll get your package if you're a Prime member in 2 days or less. And more, they're adding more and more millions of items that you can get in 1 day. And now they're adding millions more items that you can get on the same day. And this is giving Amazon a persistent, long-lasting, sustainable competitive advantage because they've spent so much money, time, and energy and study building this logistics network that it would be, I don't want to say impossible, but it would be very difficult for any competitor to replicate this kind of success. And it would take years for them to try and attempt this. Now, that could change. These competitive dynamics could change if we have some kind of innovation that disrupts the industry. Think of things like drone delivery, driverless car delivery, robotics, etc. Those kinds of innovations could threaten what Amazon has built because it's so far ahead right now in this business that those could be threats, right? If robotics or driverless car technology or drone delivery becomes available and some other company capitalizes on that technology better than Amazon capitalizes on it, then that could threaten Amazon's dominance in this category in its expansions and margins. But to counter that, Amazon itself is investing aggressively in those things. In drone delivery, they're studying that and testing that. They're also utilizing robotics significantly inside their warehouses. And they've also got their own little driverless car business that they're testing. And so they've got their foot in the door. They've got their finger on these pulses. They're not going to let those technologies come out of nowhere and disrupt their business, disrupt what they've been able to build over these last couple of decades. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.